Mic check. Test. Hey guys, I don't know what's up with the music, but I think the mic should be working all right. Did a quick mic check. Maybe someone could just confirm and then we'll get going. Still haven't got the new battle station fully dialed in yet. Mic good, music off. That's what I figured. All right, no worries. We'll just do this one with no jams for the moment. Whatever. All right. All right, here we go. So BTC start out. What's up, everybody? See some people chiming in on the chat. What's up, everybody? Recording the stream in case you guys want to rewatch or any of that good stuff. A lot of people are busy right now, I'm sure. Just kind of random time, of course, out of nowhere, right? So all right, so we got Bitcoin right now on the weekly pulled up. So obviously way zoomed out, but this is good view, good perspective here, right? Obviously we've been in a little bit of a nuke situation for the past I don't know, basically all day, right? Ever since like 21.3 broke, 21.5, 21.3 area. But anyways, we'll zoom into that in a little bit. So reason I wanted to start out here on the weekly is just so you guys can see this blue line, right? This is what I kind of want to show you. So something we've been, I mean, not expecting to roll over, but in anticipating it, I guess is a better word, because in theory what we're looking at here is a hidden bearish divergence, but our anchor point is so high, right? Because of this small little island here of positive momentum back from like April. Yeah, like back from April, the April high here, 48K. And so the problem is that this could have went as high as 46.4 and still technically been valid as hidden bearish divergence. So it was only a matter of when, but the range here was wide. Okay, so we've been looking for some other signals to go along with that, but yeah, I mean this is something definitely been on our radar for weeks, obviously, right? But could have continued to play it out further and further, but looks like we're getting the rollover situation now in 25.2. I mean, it was pretty substantial area. We came over here and basically double topped from the August little high there, and made that around 25.2. So anyways, now that this is playing out or attempting to play out, right, it's still not completely dialed in and confirmed until this at least starts to turn negative, because at any point here, say you double bottom right now and then rally and continue on up, this would just extend right back over here and still be valid, but the positive momentum would remain positive, right? And you'd continue to, if we zoomed in on this, right, you can see it's rolling over, but it's rolled over before like this, right? And then again positive momentum. So really we're looking for that negative. See over here when this histogram finally turned red back in November. So we're looking for something very similar right here to play out. So keep an eye on that. RSI though looking really I mean, horrible, which is good for somebody in a short, right? We want things to look bad, and this is not good. So basically, you've lost that, like, that midpoint of the range. If this was one big range, right? If we were to just plot this, right, as a massive range, see your midpoint, you've lost your midpoint, so you're on the negative side of the midpoint, right? Which if you were trying to turn this bullish, you would want to see that recaptured and continue on up, right? But right now, I mean, you're just falling through it. So you're not, the real critical place on the RSI would probably be this point here. You can see it where it had that previous kind of high. It's not a high on price, it's just a strength, right? It's momentum. So something like this, right, would be what we want to see for bearish continuation. Okay. Let me get rid of some of those. All right. So zooming back out, but just looking at price now, we have a couple things going on here that we want to keep in mind. So right here we have a critical 17K area where you see it's basically the last little bit of support we have locally on the weekly, at least, and it's a huge square up area where when price was last here in January, it took off from that point, and it has yet to ever come and back test it, right? So for one, it'd be like, okay, at least get back there to that point, right? At least go back and hit this back test, and then, whatever, maybe put in another lower high and then dump again. But yeah, that's definitely the next critical zone locally. Now, that doesn't necessarily do anything for our massive harmonic here. That's just price action within, right? Nothing to worry about as far as this big picture goes. That's more of a low time frame situation that we're looking at, which we'll look at that like on the 4 hour here in a second. But anyway, so yeah, dropping this down to this 17 to 18K area is very likely, if and especially we break that previous all-time high from back here from 2017, right? We could take we're basically on it, right? You can see where we are. So even if we take the closes and be more conservative about it, right? You have a little bit of room still left to hit it. But if and when you do, odds are you take a few bites out of it before it actually fails, right? But yeah, so that's definitely critical area. And that, let me zoom back out here. So looking at this target, why are we at this target as far as this gray box, as far as this short target, 12, basically 11.8-ish area? So we're looking at two things for that. So three things actually, which is great, right? The more things that align at a certain point, the better. So of course you could see we have the massive harmonic painted in purple, and right now we have this painted as a shark. Reason it's a shark is because it's only really one of two things. You had this A anchor point high back in April 21st at the 65, but then you put in a slightly higher high, right? The actual all-time high. So due to that, we're only looking at harmonics that have a higher C anchor point, right? So that eliminates a lot of things. Like a Gartley would be like this, right? The C would be lower than the A. Same thing with the bat. The bat would just have like a higher B point here and a little bit of be like this. But either way, the bat, all these harmonics, butterfly, crabs, they would extend down, but all of them have a lower C, the A being the highest point, C being a lower high. Well, in this situation, we don't have that, right? We have a higher C up here. So due to that factor, we only have two harmonics that it could really be, and that's cipher and a shark. So we're both of which, could have had this 115 high. Let's see where it's at. It's about whatever, close enough. 148, 14. There we go. All right, so both of them have this slightly higher high. The only difference being is the shark will be looking for this 886, and the cipher will have a slightly more conservative, shallower target like this, right? But both of them have this higher C. All right, so we have that box checked, okay? So now we're just looking down here for the D. So we just said one of them, shark 886, that's what we have plotted. And even if we were being safe and we went cipher and we're more conservative, that's 786. And a lot of people previously were arguing that the cipher, boom, right there, was already in, right? And a lot of people, not a lot, because very few people even know what a cipher is, but some people definitely had plotted a cipher, and we got reaction there, and everybody, was calling for it to go to targets already. The reason we think otherwise, and again, it could still be a cipher and we just double bottom, right? A cipher would confirm like this, and it would give us another bottom at that same entry point, right? And then it would continue on up. So still could be. Problem is, the reason I don't like that at the moment is because of what we discussed initially, right? That hidden bearish divergence, if it's going to play out, it's very likely going to sweep the current low, right? A lot of times, not a lot of times, I mean, countless times, when hidden bearish divergence plays out, it will sweep this local low, right? And that being said, your 786 sweeps, goes to the next critical fib level, and then that's where we get this 886, right? So that's more of, I guess, my argument for why, if that makes a little bit of sense. Okay, another thing is we would be looking for this. Let me change the color of this trend line. Okay, so now that we have the bearish argument rolling over, right? If this does indeed roll over, how do you then paint or reverse, right? What would we be looking for to confirm this bottom? Well, we'd want it to happen at the 886 for one, and that we need these oscillators to be in our favor. So something like this would happen, right? Like this rolls over negative, but not deep enough to actually sweep this previous point. See this point I'm talking about here? Whoops. All right, so let me just zoom in on that. So if we have this previous histogram island, right, and we paint a new one like this, okay? This being another negative momentum, all red, right? Okay, so we paint that. Now we'd be looking for something like this, okay? 1, 2, 3. And this would be our class A bullish divergence that would paint 3 times. So it'd start up here, right? See this first island started right here. 1 lines up with this island, January 22nd. Second one would go right here. 2, which lined up with this June 22nd island. And then third, we'd have it somewhere out here, right? So, whoops. So something like that is what we're looking for. And again, we want that to happen right at our critical fib level. So let's look at those fib levels. So we understand where we're targeting here, right? We understand why we have this kind of green line. It's opposite of what our blue line is doing bearishly. It's going to turn and go into a positive type of divergence, right? Bullish, positive, up. All right, so now let's look at these fibs, okay? So we're going to do two things. We're going to fib from X to A, all right? And then we look at that, and it gives us this 886, 10, 7, 4, 4. Then we're going to do another one, and we're going to fib this from the B anchor point up to the C high. And again, you can see this gave us a 114 at 12,164. So I'm going to zoom in on those. And you can see these overlaying fib levels. Now, look what happened the last time we were in that overlaying fib level. Look at the reactions, right? And that's where the cipher argument was coming from. You had an initial touch of that 1272 local fib, then you came down and you hit the deep 786 of the larger fib, right? And you had this reaction zone that then immediately engulfed, right? So it was, I mean, awesome respect to this clustered fib area, right? 1272 with a 786. Well, now we got the same thing going on, right? But even deeper and even more critical, right? So we got this 114 or this 1414 with this 886. So right there, you can see our harmonic falls right inside of that massive critical fib levels. And at that point, this hidden bearish divergence gets to play out, sweep the liquidity pool, and fall right into our buy zone. So I don't know. I mean, that's pretty much the best argument that I've seen yet. If somebody's got a better one, love to see it. Put it in the Discord. But I don't know. I mean, that's pretty solid at this point. So let's take a look. And again, one more thing. So like, we're looking at this from just a Bitcoin perspective, right? But you know, very zoomed out, high time frame perspective. But what we're basically saying here is Bitcoin's going to go down, and at the same time, we're going to look at it here in a second, we have the DXY going up. So those two things, they often, you know, are inverse of each other, right? So even one more aligning factor. So not good for bulls, in my opinion. Okay, yeah, let's check out, real quick before we leave Bitcoin, we'll zoom in a little bit here and go locally. So back to this 4 hour, we marked off a point where we said between 17 and 18, there's another point before we get really all the way down to, you know, that 11.8, just absolute destruction, right? So this current harmonic, again, same thing, right? We just talked about this. We have a slightly higher C than the A anchor point. So two things are in play. Right now we have this plotted conservatively cipher 18K. If it's not the cipher, it's only going to be worse. It's going to be at minimum at that point 886, which is your 17.2, right? So in theory, you could target both of these areas. And how are we going to know which one it is? As we approach the first one, not that it's a guarantee, but it's looking pretty likely at this point. But as we approach that 18K area, we're going to look at these variables, okay? And if there's still more room to go, then very easily it could drop another $700 and hit the 886, right? Very likely. But if when we're approaching the momentum is flipping bullish, at that point, even in anticipation of that point, it's like, well, we may barely have enough negative momentum left in the tank to even hit the 786, right? And then likely you see that reversal there. So those are kind of something to keep in mind. But either way, I mean, it's pretty likely that you're going to see some kind of test into that zone. And reason being, it's because, like, okay, guys, look at this. If we look back here to the left, right, we have two things going on here. We have this last little bit of, like, this little cluster area that just completely got blown right through, right? So now, even if I put that back, right, what do you have below that as support? It's just the void, right? Not until this peak back here from December 22nd at 18,350 do you even really see anything. This just took off, right? And if you go back and look, that same area, right, this same void exists right through here, right? This is like the void. So that's why, look at that, right, how that lines up with our target, right? We've lost this one, which I'll make it like a slightly different color so you can see it. We've lost that support, right? We've broken right through it, and now the gray box is the void. So like we're in like dead space there. That's why this can just easily, every time this has gone into this void, it's either dumped right through it or it's pumped right through it. So what makes us think all of a sudden we're going to just have support in the middle of dead space here? The only thing that saves you in that zone, watch, we'll zoom out to plot it and we'll go back in. So we're going to come back to the previous, we'll look at it on the weekly even, previous all-time high right here, and we'll plot this, okay? And we'll leave it there, and we'll make sure we'll put it like in pink, purple or something so we know what it is, and we'll make sure it's on the 4 hour, okay? So now that it's there, we'll go back to the 4 hour so you guys see where it came from, right? But it's really the only thing that's in that void zone is that purple line, right? And it's like right in the middle. Okay, so what do you have there? You have this slight little stutter right at that. But I mean, that's really it, guys. So and again, that's even marking it extremely conservative. That's from the closes on the weekly, right? It was 19.8 if you want to mark it to the wick. So if you take it to the high, right, it's just, there's nothing there. There's nothing there locally, at least locally. So do I think this is just going to be disregarded? No, but it's more going to be like this, right? It's going to be something that we're going to hit it, and then we're going to have some kind of reaction. We're going to hit it again, reaction, hit it again. And these reactions could be even higher. But what I'm looking for is like us to just chew at that. Somebody's going to have all kinds of bids there, right? Just buy orders, just layered up right at that critical zone, thinking it's just rock solid support. So you're going to naturally have people trying to grab that 19.8 as a bottom and hope to run it all the way back up, right? And yes, like we said, you grab something here, you may get a sell right here. That's a good little move. But in theory, all I'm expecting for is just to keep testing. And once this is tested enough, the bottom's just gonna fall right out of it. So that's what we're looking for there. Zooming way in. Okay, so if we can, let me square this back up here. If we zoom way in, people are looking for a possible entry that missed this, and I was talking about this 21.4 as a possibility area, right? So looking back at the 4 hour, you can see our B anchor point is at 21.4. We have this white line marked there. So let's make sure we see that all the way through. And go back to the minute. So here it is, right? There's our 21.4 mark. So if we look at, this is not looking good on the 15 already. So low time frame isn't helping you because you're already painting hidden bearish divergence. Gonna just, and that's why it's selling off again, right? So go to like 30-minute. Here it hasn't happened yet, and on 1 hour hasn't happened yet. So on these, what we'd be looking for is something like this. Okay, this momentum is gonna do what it's gonna do here for a little bit, but it's gonna come and roll back over and go positive. Okay, and when it goes positive, we want it to break higher than this previous island. Okay, and what it's going to do is again paint hidden bearish divergence. See, it's going to breach this island, and it's going to paint a higher peak of positive momentum in green. Okay, and then you're going to see this. Okay, so once we see this, this is basically our cue that is going to dump again, right? And this is exactly what we're looking for. So again, this might find some little support here, take its first bite, right? It's basically already doing that, but you're taking your first bite out of that critical area, right? And then you're going to get this bounce, and this bounce is going to paint this higher positive island of on the MACD histogram. You're going to paint this positive momentum, but it's coming from this previous island, which was way up here. Okay, so you would have to break 21.8 to invalidate this, and very likely you're not, because you have this 21.4 overhead resistance. So anywhere from here down, this failure point right here paints the hidden bearish divergence. So even if you get the high side of it, right, you run this all the way back up here and you get this high side, you're going to just completely devastate again. And what happens on the hidden bearish divergence? We sweep the low, right? So boom, you take another bite out of it. Now there's like two big chunks out of that 19.8 marker, right? So again, it's like you found this little range, right, that may create now, right? So okay, here's my range. And the first time I got out of it, whatever. Well, the second time I'm just failing, right? And then boom, here's your third bite. So now it's like rule of three. 1, 2, 3. 3 strikes, you're out. Failure. Again, do the same thing. Back test again. Hidden bearish divergence. Fail again. And it's just a continual lower high, lower high, lower high, lower high, right? And then lower low, lower low, lower low. So trending down right into the break of the most critical possible point really on the Bitcoin chart is 19.8, just because of where we are and how critical that previous 2017 all-time high was. It's just such an important area that when it breaks, whether that's to the downside or the upside, it's violent, like extremely violent. That's where you guys see those. I don't know if you've ever seen one before, but like recently we've seen like $1,000 candles, but I mean, that's the time you can get like, I don't know, I'm not going to say $10,000 candle, but like $3,000-$4,000 move, right, on price, because it's just so dramatic right there. So looking back at this, we have this overhead resistance coming from the B anchor point, right? It's also kind of this block right here. But yeah, that B anchor point you can see right here, right? What was previous resistance, we broke through, tested it, became the B anchor point support, rolled up. Now we came all the way back down to it and then fell through it. So that's a critical resistance right there. I don't really see us. That's why the stop loss I have right now is above this previous cluster. Initially our stop loss started here, right? And then we go to break even, and then we're at this previous high. And then, now we've dropped down to above this local cluster area, which was before we lost the upsloping trend line. It was kind of like a upsloping parallel channel that I had painted right here. Like this, somewhat. It was definitely more apparent on the bottom side, right? And then now, so that's the diagonal support resistance, right? Breaking. And now we have the critical horizontal support resistance that now broke, right? So the only thing we really didn't do, I mean, we just completely fell through it, right? There was nothing. You just fell right through it. So assuming that, that's why I say there is a possibility you could end up back up here. Just to, back test that now, confirm it as resistance. Again, you're just going to paint that hidden bearish divergence when you get there. Even if it's from here, I forget where that island was, but either way, you guys know what I'm saying. It was up at the top, right? So, okay, it'd be right here. So something like this, right? Hidden bearish divergence at the overhead resistance, 21.4, okay? So at best, you get 21.4. I really don't see you getting any better than that. I'd be surprised, really would, because to get back up there, that's a ways. You got to climb $1,400. And right now, I mean, I don't know. You don't really have help, right? DXY is just crippling you, and people are losing faith right now at the moment because they just got devastated. Like, how many people are going to push this back up as high as 21.4 and then continue to buy? Well, others are shorting right on top of you, right? Taking a big short on you. So, I don't know. Good luck. Good luck. All right. So, overhead resistance, we're sandwiched, right, between the B anchor point overhead and the 2017 all-time high. So here's our little range bound zone, right? That's what we're talking about earlier. I hate when you click these and they don't click. Okay, so something like this, right? So we get back up there, get through it once, right? But then you fail back through it, go back, hit it again. This is where you get that inverse head and shoulders and then just nukes and invalidates it. That'd be cool to see. All right, so I think we've covered Bitcoin. But yeah, if somebody's got a better argument, I'd love to hear it. Here's your support, right? Here's all this previous price action. That's what we're going to lay right on top of as support. Get another initial reaction off this harmonic, just depending, right? It's too early to tell. That's why we need to see how the oscillators react, because even this could get actually even worse, because if it's a shark, it technically could also 113, okay? And if this 113s as a sharky, what is that going to do? Yeah, fun times, 15.4. It would sweep all that previous support. So really critical zones right there that we're going to have to watch for as we approach. Okay. Next one you have is Russian Ethereum. So this guy, same thing. Right now we've zoomed out to the weekly, okay? We have two nasty harmonics, one smaller local butterfly, and then we have this much larger shark, similar to Bitcoin, where you have the higher C high, and we'd be targeting that 886 low, right? This one, in fact, though, lines up even better, which is, you love to see it, right? So, okay, check this out. Zooming out, looking at the oscillators, it's not good, okay? So you have this tiny little positive island when we peaked out up here at 35.90 on March 22nd. So that's where we're going to anchor from. You see this tiny little guy here, okay? So we're going to anchor from there, and just to plot it for now, just to show you where it's coming from, okay? So there is your hidden bearish divergence, and it just basically gets even worse, right? It becomes like 3x hidden bearish divergence. And what do I mean by that? It's because you put in this high on price, lower high on price, and an even lower high on price, okay? And meanwhile, you're putting in higher levels on the momentum oscillator on the MACD, right? You're putting in this low, then you have this higher level when you hit this first A pivot, and then now that you're at the C, this lower low, you have an even higher level. You see this? It's supposed to be tricky because that's the point. Literally the name of it is hidden divergence, right? It's supposed to hide there from you and really not let you identify it as clearly as other things. So I don't know. In my opinion, this weekly hidden bearish divergence is gonna sweep these. It's gonna sweep the low. And if you sweep this first low at 11, all you did is like that's not a harmonic. That's not nothing, right? That looked like this. What is this? Blah. It's not nothing, right? So it's much more likely that you sweep. It's like a double liquidity grab, right? So where's that little drippy? I don't know. There's too many of these emojis. Here we go. Drippy. Not the grippy, the drippy. Okay, so you have two of these, right? Whoops. Come on, TradingView. Work with us. You have a liquidity grab here, and you have a liquidity grab here. So come down, take both of them out, find support down here at 575, and yeah. Not only that, but like, look back over here. So this previous price action, okay, you broke out, right? You had this breakout, and then you came in, you back tested, and then you started to take off. Okay, so what does that mean to me? It means that, okay, you didn't account for some stuff down here. Okay, we left this behind. Okay, we left some liquidity behind. Then we had some here, right? But we went and we took that at this point. But we then took off, right? So what did we leave behind? You have a little bit of a back test here and here and here. So it's about here. Okay? If it's not this one, then it's way down here at below the critical SR flip of the year. So I don't think that's the one you're going to get. That's too hard to get there. So in my opinion, the one we identified is right here. Okay, so that being said, let's throw a little bonk, and then let's see where that is exactly. Okay, so let's come back over here. Oh, wait a minute, look at this, right in that zone. Okay, you see what I mean? Like, that's where price last took off from, and it never made it back there. Never made it back here. So I don't know, I find those things interesting, and oftentimes, you know, price ends back up at those places. Okay, look at it right here. Okay, check this out. You see how price on May 10th right here, you had this candle closes right here, and then you just nuked, right? You just nuked. Well, look what price did. It came right back to that point and hit that square up, right? And before it then did another thing. Okay, so that's the same thing we're looking at, just in inverse. I'm trying to take you right back to a point that we left behind, right? We're gonna go pick up the bags we left behind. Okay, so that's one thing. Okay, falls right in our zone. That's one thing. Another thing, obviously in blue we have the large 886, right? So we're getting there. Let's fib again, right? Like we just did. So we fib from our X low to our A high, mark 1, and then we fib from our B anchor point to our C high and mark 2, overlaying fibs. Now let's zoom in. What do we have here? What do we have here, right? So we have another one of those zones where we have two fibs overlaying, and this is from the blue harmonic. Okay, now let's get rid of the blue harmonic temporarily, and let's just look at the purple one. Okay, the local one. So we know our box is from the blue harmonic. So looking at the butterfly locally, again, fib from X to A, fib from B to C, and what's happening here? We have another 1272 and 1414 aligning from our purple harmonic. Okay, so now that you can see where everything's coming from, okay, let me overlay these again, and you can see how much is going on in that one little area. Okay, so look at these 1414s. They basically are on each other. Look at this. You have to zoom in extremely far to actually see that there's two of them there. You see this? So we have these 2 points, okay, between $400 and $575. Now, our purple harmonic, let me clean this up a little. I just wanted you guys to see why that's our zone here. So our purple harmonic is a butterfly that starts at the 1272, but it can go as deep as the 1414 or even the 1618, right? So 1618 would even be lower, but 1414, boom, that aligns right inside of that zone. So what would we want to do is, you know, we layer bids in that area, right? Say you're going to, it doesn't matter the amount, you could divvy it up however you want. But let's just say you're going to put, you know, whatever, 10 grand in ETH at this point. You can take your 10 grand and you can layer it, and do 10 different $1,000 buys if you want, right? This is the time where dollar cost averaging is actually a good thing in your favor, because you have method to your madness. You're not just doing it because it's Friday and you got paid. I mean, that's fine. That's one way of accumulating a stack, but I mean, you potentially could be doing that in a situation where, you know, you're buying all the way down, right? And there's just no end to it, and you become, I don't know, you just lose your will, right? The reason you're in it to begin with gets just completely chewed away in that kind of a scenario. So that's bad, right? Instead, why not dollar cost average in when you have some things going in your favor like this, right? That's what you're looking for. Add method to your madness, okay? So 400 to 575 on ETH. That's far from right now, but hey, I mean, look, when we were back over here, look at what we identified. This has been there since September of 2020, okay? We saw this critical area on ETH where we had this, whoops, stupid magnet. We had this, you know, neckline that developed, right? It was clear, and again we chewed at it and we chewed at it and we chewed at it, and then we broke, hooked it, and then we went. And that right there at the time, and it was this support resistance flip of the year, ladies and gentlemen. And from that point, it's like, all right, ETH was $300. Nobody was even like that concerned with it. It was just like, oh, $300, cool. And then what happened, right? You massively just erupt, okay? So don't think that we can't go from this little spot here to here, right? This is minuscule, right? This is like, if you want to measure for equals here, right? This is what it did, okay? It's this little tiny move here. That's all we're asking for. Okay. So yeah, things like that can happen very easily. All right, moving on. I think that kind of covers it. DXY here. Okay. So DXY has been a driver of this recent madness because it is on a uptrend. Okay. We can clearly see here that we've put in our B anchor and we are trending upwards. All right. So we have yet to hit our first potential pivot area, which is anywhere between the C and the D anchor points. That's why we have it double overlaid, right? For example, you can see at any point right there, it can go valid, but it can also go as high as there and still be the same bullish bat pattern. Okay, so whoops. So that being said, right, let me show you again what we're doing here. We have our X was our initial, let me move this. Our X was our initial entry from our bottom, right? So this initial impulse was irrelevant. So we had the initial impulse, okay? And then we came and we retraced 0.55. So 50% retrace, 0.55. And now we're making that next wave up. Now, something interesting here. Let me plot this real quick. Something interesting here is that this B, being that it's a 5-5, normally on a bat, we'd want to see this stop, whoops, stop at a 50, which is about here, okay? So if we pull up to that point, that's really where a bat should have stopped, okay? So the fact that we extended beyond that and we hit the 0.55, potentially that you can argue maybe this is as close to a 618 as it is a 0.5. That being said, it's irrelevant because the C on a Gartley or a bat would be the same. It would be from 382 all the way to 886. So we don't even need to know quite yet if our D is a Gartley 786 or if it's a bat 886, because our C anchor point is going to act the same regardless, okay? So that being said, we can start as low as here, right? The 382. And we can go as high as the 886. All right, so now you can see why we have these plotted. These two white lines between 106 and 113 is your 382 to 886 zone. And the reason we don't necessarily want to short the C is because you can run as high as 113 and still be valid. Nothing's wrong, nothing changed. You're just in an underwater short. That's it, right? So we can do that, but you know, normally we shouldn't be trading this C anchor point, right? We shouldn't trade a harmonic until it completes itself at the D, because it's still a little bit early to tell. But like I said, even if this is a Gartley, even if this is a bat, you still have the same range. And if it's a Gartley, all that's going to happen is this. This is going to come right here and go 786, 786. Okay? So if it's a Gartley, it's just going to do this. Nothing else even changed, right? The C remains the same. So no matter what, we're going to, I don't want to speak in absolute certainties, but like if this plays out, no matter what, we would come into here and we would come out of it. We'd sweep the B, right? This is where we are in Bitcoin, and then we'd end up down. And Bitcoin is like right here, right now. Okay? You are there. So, could potentially even argue you're here. Just depends which harmonic you're looking at on which time frame. Okay. So that being said, DXY up, right? Up. Bad arrow. Anyways, let's look at the momentum real quick. Look at this, guys. Look at this, what's happening on the DXY. You just started painting positive momentum, okay? For the first time since back in October, but for the first time in this uptrend, the B anchor point was here, okay? So you've ran positive that whole time, just getting rid of the negative stuff, okay? Now you're working on some actual help here for the upside. This is why I say, guys, Bitcoin is inverse here. It's inverse. So if DXY is going up as high as 113 on a weekly chart, I mean, tell me Bitcoin couldn't hit 11.8. It can very easily. Look at this RSI. Look at that RSI breakdown that we had, that we were plotting, and look at what happened on that breakdown. Okay, so you had this initial uptrend, right? Initial wave riding this RSI trend line. Soon as we broke out of it, boom, broke out, tanked, hit the B, right? So that was very interesting, right, on that RSI. So again, we're literally like gonna look for the same thing, right? You're building on this RSI. It's a little early to see. We need a few more touch points, right? But something here is building where you're gonna ride this up and you're gonna paint this C anchor point, and then you're going to break out of this RSI trend line, and this is where you're going to come all the way down and look for some class A bullish divergence here or something, right? But this is where you get that D of the harmonic, and it's almost like, look at it, right? It's like you don't paint the harmonic on the RSI, but literally you could almost follow your waves, right? You can see where it built on the RSI at that double bottom. That was that double bottom, right there. Came up, hit the top, right? Hit this top. There was your top. So you can see how this wants to play out. All right. Yeah, DXY, fun. So go back to Bitcoin real quick. Yeah, tested that line. Look at that. Let me zoom in here. 4 hour. Blunk. There's our purple line we marked. Let's zoom in here. Get rid of this. We are on the previous 2017 all-time high, 19,800. If this breaks, I mean, it's a wrap. But should it break? Probably not. I mean, it should hold the first time, but I mean, we'll see. We'll see, right? Look at that though. It's sick. The fact that we got there so fast too is just bleh. Yeah, wow. RSI is at 11. Jeez. It hasn't been this low since November 22nd, which was way down here at 15K. That's bad on the RSI, right? So because of that, it's like, okay, this makes sense why this will hold this first time around, right? It's because like you've basically exhausted all your resources here. So makes sense to not completely, because like, look, how do you break down from here and what will your RSI go to 0 or something? I mean, it can, but like normally just out of the bots and whatnot, right? You find an RSI at these levels and you're going to have some kind of reaction. So you get this initial reaction, you come back up, you test it again, right? But one of these other tests on the RSI, you're going to have the RSI has reset itself, right? So when you're testing it now, but you have room to run again, this is the times when it's more likely for it to break such a critical level. Usually that's what I've noticed, right? So we'll see. Let's see how this plays out. Yeah, 19.8. Wow. Good stuff. Okay. Couple other charts we can look at here. That's the dollar. So here we were looking at LVS. This is something that's been on our radar. Let me take this off of the weekly, monthly. Okay. So someone asked earlier, kind of, again, one of these things that we use to identify, like, how do we know which kind of a pattern we're looking for here, right? So we have this initial impulse, right? You have this initial impulse, and then it's like, okay, where's my retracement? How far did we retrace? So we would fib that, right? We'd say, okay, if here was my bottom, I'm going to anchor at my discernible low, and I'm going to run this up to a discernible swing high, right? Swing high, swing low. Look at that retracement. It touched the 618 exactly. Okay, now for us that rings a bell, because when you touch the 1618, it's rare. Okay, and it's rare, but it's critical and important. Normally you have a much shallower 382, 50%, whatever, but the fact that we got that 618 like that, so perfect, that screams Gartley. So you're like, okay, if I have a 618, that screams Gartley. Now we just talked about the C. C could be as low as 382, but as high as 886. So that is more irrelevant of a anchor point. We're just painting data. We just don't want to see it, completely erupt and invalidate. But as long as it stays below the 886 right here, we're valid, okay? And if we have a 618 here and we're between a 382 and an 886 here, well, naturally we'd then be looking for a 786, and that would complete a textbook Gartley. So when we go back to the actual price action and we paint this X, A, B, C, D, what do we find, right? So what do we find is that 786 is right here. Okay, so we painted the 618, we got the B, okay, confirmed, and then we went up, painted the C, and we were between a 382 and an 886, confirmed. We had an 872, so we did not exceed the 886. Now just give me the 786. All right, well, there it is down here, just waiting, waiting in the depths, right? So looking back at that, we'd say, all right, well, let's look at our price action now. And we'd say, okay, well, we painted this initial swing high, and then we painted the lower high. And now look, lower high, lower low, lower high, lower lows, lower highs, lower lows. This is completely downtrending right into our sweet spot, right? So those are things that we're looking for all the time, right? So now we're like, okay, we have an idea, we have a plan here. The plan is that we're gonna insert our 401k at $20 on LVS. We're gonna try and open a casino at that time. All right, so if we're like, okay, our target is $20, how do we get there? So we're zooming in now to the daily. Well, on the daily, this was our most recent lower high, critical from the highs from what we just were zoomed out. We just painted a huge butterfly, right? 1618 butterfly here that has double topping right at the 1618, right? Critical golden mean ratio fib level, right? So, all right, give me this 1618. Let me fib some things here now. If this was, if we target this from A low to our B high, and then we target this C low to our D high, and we come back down here and we're looking at our buy zone of $20. Look at this. We just overlaid 2 fibs locally at $22, and our Gartley's at $20.43. This is the sweet spot right there. Okay, screenshot it, NFT it, do whatever you want. Come back to it in about a year, because it'll take that long to get there. But like, look at that perfect sweet spot trade. So now in the meantime, you have this this double harmonic, right? And this one's throwing you right into your buy zone of the other one. Well, I mean, geez, look at that trade. You could even be more conservative, right? And go 3-1. You can give yourself a 3-1 stop. That allows you to have a stop at $72 and have a 3-1 risk to reward, 65% gains. So you could even be more conservative and go 4-1, right? I mean, safe. Yeah, more conservative, safe trade here and go 4-1 and still be getting 65% gains, only risking 16%. So current trade that we're in is an LVS short in anticipation of a LVS long, as we just play both sides of the coin, right? So this, we're looking for this to dump as DXY continues to run up to that that 113 level, right? So this is just going to get devastated. And I'm when things like this happen, like one of these days we're going to come in here and you're just going to see this big gap down, right? Where you're going to have price action and then all of a sudden it's just like gap down. And then this is going to do some other stuff and then come down. And you're going to have this massive gap for later. That way, once we fill, we can go back up and get back up in there and fill the gap left behind, right? So things we are watching for. Okay. Okay, monthly. Let's go to the next one. Oh, this is futures. So we'll look at futures real quick. Let me clean this up here. All right, so some people have seen this chart and have asked me why or how did I reach this conclusion somehow, some way. So let's look at the first pattern. This is not a harmonic, but it is an ABCD pattern, which is a 4-point pattern, right? Our harmonics are 5-point patterns. So if you look, our harmonics X, A, B, C, D, 5 points, right? But ABCD patterns are A, B, C, D, 4-point patterns. So not as powerful, but still strong in their own ways, and it's because they respect fibs. They use fibs, same as harmonics, in order to paint, and fibs are important, right? Fibs are powerful in themselves. So let's take a look at this. I'm going to delete this real quick, or I'll just move it. All right. So what happened is we had this top, okay? So we saw this initial top, and we were like, okay, if this is a top, then this is a wave, right? An initial dump. And then we found this bottom. And then how far did you come back? Okay. That's the beginning of any harmonic, is how far back did you retrace the initial move, right? Because the initial move is irrelevant at how far you dump. It just matters how far did you come back and what marking was that. And now you can start to look at what harmonics have rules that align with you, okay? So we're going to fib this from the 48.13 high down to this right here, 42.17 low, and look, once again we hit this 618 and we double top there perfectly, guys, perfectly. So from there we then sold off again, right? So when we sold off again, we now pivot from the low to this high, and look at the sell off, guys. 1272. So whenever I see a 618 into a 1272, I immediately am thinking ABCD pattern, because my Gartley, which was our initial, right? If we came down and we hit a 618 right here and we were thinking Gartley, it would have to maintain above the A and do something like this, right? We just talked about this. It can't exceed the 886. Well, we did. We went all the way to the 1272. So our Gartley's gone. But what else has a 618 in it? The ABCD pattern. So this is why we went ABCD pattern, okay? So here we had our 618, retracement into a 1272. And then what happens after you do that? What's your retracement at that point is you come back up and you hit this C, okay? So you come back up from the 1272, double bottom to 1272, and you come back up and you hit this C target, okay? So let's remember that. Okay, well, look at this again. 1618 into a 1272. Okay, so what is my target, guys? It's the C, right? It's the C zone. Okay, well, what's happening here? Look at that. Right at the C, we tapped it just shy, but basically, I mean, that's there, guys. That you're hitting your target, okay? So after hitting this C, so come back and look at this, right? After hitting this C target, what happens? You begin to sell off, all right? So what kind of sell off? From low to high, 1618. See this? 1618, sell off, okay? From the 1272 low to your C target high, you hit a 1618, all right? So let's do that again over here. From our 1272 low, okay, we're going to go up and we're going to hit our C target high, right? Our C target high, fibbed it, and we're going 1618 right there. That's exactly where we are. You see now why we got to what we got. So yeah, that's the explanation on the ABCD pattern. We've had a couple questions on that, so hopefully that clarified things for you. Okay. Guys, I see some people saying 1.702 isn't 1618. You'll never take a trade if you're trying to be that meticulous, okay? There's zones. You layer in the zone at the 1618 or at the 618, and due to over leveraged positions, liquidation engines will push you slightly above or slightly below certain areas. If you're expecting for exact, like look at this, 886, but it's not exactly 886, right? I mean, it's actually 9, okay? But that's 886, guys. So don't be so critical on yourself. Just watch out. Curious about the 702. The 702 is not a critical fib level. That's EK fib level. Definitely respected tons of times. Don't get me wrong, but that is not a core fib level that I am concerned with. If you'll see here, here's their core fib levels: 236, 382. The 5 shouldn't even be on there either, really, right? We should, in theory, even get rid of the 5 because it's not even a fib level. We should go 618, 786, 886. So our 786 is your 702, okay? So that's just the way I prefer it. I don't mark a 702. I'm not concerned with the 702. I'm concerned with 786. I don't have anything. I don't have any harmonics in my core group of harmonics that mention 702 anywhere, okay? They all refer to 786, 886, right? So that's the way that my book is written. The 702 is not in my book. It's in a lot of other books, but not mine. I didn't write a book. I'm just talking about the one that I read from, that I learned from, okay? Bank of America. We've been seeing a lot of FUD in the banking industry just getting devastated, right? So you had what was it, Silvergate, or I don't even know what crap kind of bank that was, but failed, and all kinds of stuff, right? So banking, Bank of America, good example here for us of inversing things, right? We've been looking for bullish. This one's bearish. Still a bat. Still, rules of a bat we just talked about between the 382 and the 0.5. So this was, 333, whatever. Little shy, but still reacted. You still got your retrace 382 to 886 again here. And then at your 886, you've getting a reaction. Now, what else is critically important here? We were on, was it daily? Jeez, hold on. Yes, right here. Okay. So look at this, guys. On the monthly, this previous X high, right? You painted this positive momentum island, you painted the X high, and now you came and you put in a slightly lower high. But look at all this momentum you've been painting here. So that right there is our hidden bearish divergence again to the downside. This is why, you know, we're hoping this would start to roll over. And then looking at the weekly, look at this on the weekly. Things like this don't often paint, but when they do, they're usually fairly powerful, right? And it's our classic head and shoulders on the MACD, right? So it's like you painted this little area here where it was like, okay, I had my initial impulse down, and now I'm like redistribution, right? Where, you know, initially maybe people are thinking, okay, are we reaccumulating here or are we redistributing? And it appears to me this is redistribution. Whereas now once we break out of this, right, this is a critical area here that you've painted of support that's being tested, where, you know, taking a bite out of it, now we're taking a bite out of it again. And look at this last bite, right? It's nasty. And look how you have plenty of room to run on that negative momentum, plenty of room to run on that RSI. And yeah, maybe you get a little break, hook, and follow through. But yeah, look at that break just to fill the gap, right? Break, fill the gap, slightly run back up, fail again because you back tested all this heavy resistance, and then nuke again. But yeah, so Bank of America, dump it, right? Nuke it. Shake Shack is another one on our radar here. Shake Shack, kind of opposite reaction as the Bank of America, right? Whereas you got a much better B on your because you hit the 5, but it was a little deeper again, not quite 618, but you had the 5 again. So again, we're looking for that 886. We hit the 886, we engulfed, and we back tested slightly higher high, engulfed again. So both times we put in these slightly higher lows, you engulfed both of them, right? But now looks like you're painting a local swing high failure pattern on a lower time frame. But that's fine, because this is almost exactly what we want to see, where you have this initial low, okay, and then you're painting this slightly higher low, okay, and then now you're gonna look to paint this third slightly higher low, okay. And this is actually like really powerful, right? So don't be turned off by this. Look for a potential buy. And we'd say, okay, well, what would we be looking for to buy there? We'd be looking like this. We would zoom in and we would take our fibs, and we'd take this local swing low to swing high, and we would target, you know, anywhere from the 5 to the 886 to the deep retrace. And, you know, we could buy some here at 51. We could buy some more at 48.75, and let's buy a little bit more at 45. And this should be a safe area to layer yourself into for a dollar cost average entry into this asset. And I would have a stop loss right here. You could even be tighter and have the stop loss below this first low, because that's your 886 and it's above, the 886 is above you, right? So you're using that 886 as support. So let me show you what I mean. Let me fib this from X to A, and then I'll zoom in, and you can see where the 886 is, right? So you have like these two, you have this candle close here, and you have this candle closes here that are acting as current support for you, right? So you can even take one more stab here at 42 and just buy all this. Just buy it, fill your bags, right? And use this last what is it, 437 as your protective stop area, because if you sweep all that and fall below it, you're probably going to invalidate this whole thing, to be honest. Now, what tells us we're going in a good direction, that we have some good things going on? Well, not only do we have our harmonic, right? Not only do we have our higher consecutive higher lows, engulfing higher lows on our off of our 886 fib, but if you look at our MACD and our RSI, we have hidden bullish divergence on the MACD, where we had this low on price and a higher low on price, but lower levels of negative momentum. Same thing on the RSI, right? So you have hidden bullish divergence on both MACD and RSI at critical 886 fib, with a nice accumulation pattern happening. Okay, so if all works out here, we would layer into this zone, and we would be targeting at this point, I'm sorry, just clean it up so you guys can see what's going on here. We'd be targeting the C high at around 106 and the A around 118. So that little block up there, basically like a deep retrace, right? So if we fib this again from from high to low, we're gonna put this, you could even go as high as 886 here, between the 786 and 886. Here's your deep retrace area. But yeah, I'd probably start taking profit even as low as the 618 here. So yeah, I mean, but look at that. Anywhere you took profit in this area, right? You buy here and you're selling even at the low point. That's 123% to the 618. So like, it doesn't matter. Any of this is gravy. Play a game, right? Once you get here, continue to just trail the stop and see how high you can get it. Sandwich it in here between the 886 and the stop loss until finally one of them gives, right? And just play a game with yourself. How high can I take this stop loss? Reset it every day or every couple days, depending on, because look, here's the thing, guys. When you take this initial entry, okay, your risk to reward is massive, right? Massive upside. But as let's say this is price, okay? So as price, we'll put price in blue. So as price starts to rise, and our entry, would look more like this, right? So like, you're giving away your, not that you're going to re-enter, I don't know if I'm explaining that right. It's just the amount of upside and the amount of downside are now getting more equal, whereas over here the amount of upside is much higher than the downside, right? It's in your favor. But as you get higher and higher, this trade actually looks like this. It's like, who would take that trade, right? Nobody. So you have to continue to raise your stop to keep the trade, equitable. Hope that makes sense. Ate a lot of gummies before we started. All right, moving along. Let's real quick check on our reaction. Bitcoin reaction. Okay, so look, not like exactly perfect here, but I'm pretty dang close, right? Reaction wise, told you guys that it didn't make sense yet. Okay, we exhausted all of our strength already. Look at this exhaustion. Okay, you need a little bit of recovery, hidden bearish divergence, and then do it again. But to just think that, it was just, that's tough, right? It just, after such a discount in price, so many people start to buy, that it's really gets tough to also just nuke through all the new coming in buyers, right? Imagine all the sidelined people. Imagine people that had buy orders at 19,800. You filled. It hit 19,778. So if you had an order at 19,800 kings, right? Now you're going to play that all the way back up to here, right? Very likely this kind of bullcrap happens throughout the night and you get a 7.2 recovery. Make this 3-1. You could be sitting like this. Really pretty, okay? This is how you should be sitting if you're in a long. I didn't mess with it because we're just in a short from such a higher level that I'm just managing this stop loss, right? So if we did anything, we would leave the short open. We'd take a small hedge with a scalp long, close it, make a small gains here, and then hope our short just continues to play out, right? That's the plan. But yeah, reaction looking good so far. Okay, this was Shake. We just looked at Shake. So now we'll look at Boeing. So, the Boeing company, airlines, pretty textbook bat. A lot of bats, guys. A lot of bats are very common, much more common, right, than Gartley's. XAB 50% retrace, common to get a 50, and then you get this whatever, and then you get the deep 886, right? It's just such a common occurring pattern. But the Gartley being less common makes it, more powerful, and maybe people don't identify it as easily because they don't see it as often, or I don't know. A lot of variables there. So anyways, we're looking for this because we got a 50% retrace from X to A. We've retraced 50% of the way. Then we got the 886 deep retrace back down, and now we're looking for the 886 deep retrace back up. Okay, think of this like also like a big range, right? We've identified the range low, and the range high. And our midpoint was B, 50%, right? Halfway up the range. Makes perfect sense. So now we're, maybe we run down a little bit, whatever. But eventually here we're looking to test this B high, break, hook, go, test top of the range, which coincides with the 886, right? This top of the range, this bottom of the range, right? Okay, so what else is going on here? So we painted a higher low. We got class B, bullish convergence, where we have oscillators converging in the same direction as price. Same thing on the RSI. I believe though on the weekly, or let me see, was it weekly? Maybe this one we were just more looking at this 886 bat. We did have a decent support area here as well that we are above, so definitely just want to stay above that and maintain above this range. Stop loss below the C at the moment. And again, we're similar to what we saw on the last chart, where it's like we had this low, now slightly higher low. So again, just come down here and paint me a slightly higher low in this little sweet spot, right? And give us another area to layer in here. Paint a higher low, right? And then run it again. So that's what I like on this one. Boeing. Next one we have is INOD. So this one, the reason I brought this up, guys, is so you can see how these Gartleys are playing out and how powerful they are. Okay, so we have our initial wave up is irrelevant. We retraced 618. Okay, 618. Now we put in our C, which was between the 382 and 886, and now we retraced 1414 and 786. Perfect reaccumulation in the buy zone, right? In the completion zone, you had a reaccumulation. You've now just pumped right out of that, and you hit this initial square up area here. Now you are targeting your C high 84, you 844, $8.44. You basically already hit that, and you're just resetting yourself, and then you're going to run again, and your next target above that is going to be right here, 1072. So this is how these Gartleys play out, and this is what we're looking for. Next one, another Gartley. Okay, so this is just a little further out. Same thing though. We had a 786, which coincided with a 1618 here, which is fibbing from B to C. So we had coinciding harmonics there, or coinciding fibs. And if you guys want to see, whoops, if you guys want to see that, we would do this. Okay, so we'd fib from low to high, and we fib from low to high. Sorry, I did not do that right. From this low to high. And there's your 786 and 1618 overlaying coinciding harmonics. And look at that buy zone, like a god, right? God tier buy zone, okay? So let me put that back. Oops. And now I'll relay that harmonic so you guys can see that. Boom. Okay, so now that we've done that, we again, first target, C target, hit. Next target up here, A target, $19 on its way up there. All right. So powerful stuff from the Gartleys. Next one we have here is Oxy. This is a petroleum company, oil stocks, probably oil. Okay, so look what we got going on here, guys. We have a massive monthly hidden bearish divergence on both the RSI and the MACD. We got our reaction, and we're beginning to roll over. So we're targeting the 50% and 618 retrace, which lines up with this kind of little bit of support that you have there, right? Little bit of support that we have here. We're thinking we'll probably get some kind of reaction there. So not looking for range low, just looking for a conservative trade. Maybe you see something like this. If you do get either the 50%, right, then you go 886. If you get the 618, right, you get the 618, then you go 786. So either way, if you wanted to hold this all the way to 24, you could. Problem is that you're going to give some back, a lot potential back. You might go all the way back to entry, right? This is why at least at the 50 you should take some, because there it could take you back to entry as well. But if you do get the 618, again back to entry, so by then you would already be out of the trade, and it would come back up here, and then whatever, you're not hurt. So yeah, that is Oxy hidden bearish divergence. Dump it. This is Alto. So okay guys, we just looked at this on two Gartleys. Okay, everyone's crying because Alto hasn't already retired them. It's like, because patience, Danielson, patience, right? Like nothing's even happened. People are all stirred up, feathers all ruffled. Again, the only reason your feathers would be ruffled is because on on Christmas Day, you bought a $7 strike call that expired on New Year's, right? And right here, you lost all your money because you expected this to print while it was Christmas night, right? That's the only reason you should be mad. is because you introduced duration, and we don't introduce duration. Duration is the one thing we cannot predict, regardless of what any witch will tell you. So why are you introducing duration? Now you've lost money when nothing's even happened. Instead of sitting at 275 spot, you'd be up 1%, right? Nothing's wrong. Nothing changed. Nothing happened. This can accumulate here for a minute, right? But in time, we will come back to this chart. We will see price action at 7. Later, we will see price action at 10. And we'll say, well, shit. Everyone got, sideways to sleep. Very few people actually profited when we had one of the most beautiful possible trades possible that we can get, and yet somehow we mess it up, right? So don't be that guy. Just buy some spot. Every time you see one of these, buy spot right there, set some alerts or some sell orders up here, and just set it and forget it, and see how many of these you can add to your portfolio. Okay, that should be your goal. You should have 20 different trades like this in your portfolio, and each one hits a target like every other month, right? Something's hitting a target, and then you could reallocate those assets into a new trade you found at the accumulation levels, not at the take profit target areas. Okay. HASI 50% retrace, ran it up 786, ran it back down 886. Textbook bat, low, higher low, higher low. Either way, this is just another example here of what we look to identify. Monthly painting hidden bullish divergence to go along with it, where you see lower levels of relative strength, lower levels of negative momentum with a higher low on price, swing low failure pattern. Pumped it off the 886. Now we're just allowing it to play out, right? So if this were the range low, and if this were the range high, there's our midpoint B, 50% retracement, right? So we're just simply looking to eventually break, hook, go, and we're targeting the range high, okay? Don't overcomplicate it. Try to replicate it, right? You want to become robotic. You want to see the same thing over and over and over again, regardless of the asset, regardless of the class, cryptos, equities, commodities. It doesn't matter. This is why, like, you shouldn't just say, oh, well, I only trade cryptos. I don't trade stocks. Well, you're leaving out all kinds of assets on the table. So like, don't put yourself into a corner, into a box for no reason. Expand your assets. All right. Oh, guess what? Another Gartley. And look at this one. This one is something. You know why? Check this out. Let's see. I'll give it 1 second for you guys to maybe see if you could identify what I'm going to say. Take a quick swallow. All right, so guys, look at this. Let me just bring our fib chart back over here on the side, and I'm gonna get rid of that 50 again because it's distracting. So critical fibs we have here 618, 786. Okay, look at this. We went from a 618 to a 618 to a 786 to a 1414, right? 1414 is up here. So just like, oh my gosh, textbook stuff, guys. You don't see Initial impulse into a 1618, into a 1618. The coinciding 1618s are godly. Try and tell you right now. You're gonna watch this stream later down the road, and you're gonna be like, son of a bitch. But be like that. So initial target 2150, next area 25. But something like this, guys, has power to do like the inverse golden mean ratio, right? What do I mean by that? We go from A high to our D low, and we target that 1618. So initially we're gonna see again this could be a potential target one. Just shave a little off, right? Profits, no one ever went broke taking profit. Then you can go up to this target to 886, but then really you can send to the 35. Okay, so it'd look like that. Right? Initial entry, and your stop would have been below X. Second target would have looked like that, right? And then from here, third target all the way. So take 30% off at each one, or whatever floats your boat, right? But like, there it is, silver platter. You have 3 Gartleys in the stream already. 3 Gartleys. It's the best Duck could do for you. Onwards we go. All right, here's DCP. DCP midstream. Hidden bearish divergence at a critical 886. See this, guys? Where we have these deep retraces, right? You hit that 886, and then you paint this hidden bearish divergence. You could paint this from all the way back here if you want. I was just taking it from the high. That's why I was down here. But even if you took it from here, it's still higher levels. But really, it's more like this, right? Because here's your peak. Here's your peak. So higher levels of positive momentum with a lower high on price. Higher levels of relative strength, lower high on price. Now your momentum is starting to go, the other way, right? Negatively. It's went from hidden bearish higher time framed to a local class A bearish locally. See this in red? So yeah, looking to short this as well. DCP. FIF, First Trust Energy Infrastructure. Let's see, we had something going on here. Yep, same thing. Hidden bearish divergence at a 886. Exact same thing that we just went over on the previous chart. You hit a critical 886, painted hidden bearish divergence, and coming down the other backside, you have the class A bearish divergence, and you are also getting it on the tail end of the RSI. So this asset would not be something I would want in my portfolio any longer. We would be exiting here at this 886, 786, 886 deep retrace, right? Take profit target area. You had plenty of time to distribute your assets you accumulated at the lows. This is distribution, and it's starting to roll over. Bye. Next, we're back to Bitcoin. Let's see where we are. Zoom in here. Initial reaction, maintaining. We're back above 20K. All right, that's probably all the drama for now. It'd be pretty safe. Again, like I said, I have a stop at like 19.8. If you were in a long, right, you would have done something like this, and your stop could, be very tight because you have an easy invalidation. You're attempting to target as high as you can get to that 21,400 area. Again, if we were fibbing this from local high, swing high to our local swing low. That 21.4 area is the 786. Imagine that. So we're looking for that 786 rejection on BTC 21,333. All right, guys. Well, I need to work on fixing the audio. I also noticed, the whole time we're basically cut off up here on the top left on our. See, I could bring this over. I should have made it a little bit teenier. I don't know. A little bit teenier, maybe. So, yeah. As far as again, looking real quick back out at Bitcoin from a high level like this, zoomed out. I just want to see if the bulls have anything in the tank. So let's go to the Magic 8 Ball. Magic 8 Ball. What's it going to be? The bulls have a chance? Or is this bearish AF? What's it going to be? What's it going to be? Let's go. It's over. Magic 8 Ball says it's over, boys. So watch out. Magic 8 Ball is like, I don't know, pretty good. Magic 8 Ball does well. Similar to the conspiracy theorists. Borderline undefeated. Just for shits and giggles. Magic 8 Ball. Confirmation. Let's own the libs. Confirmation. 11,800 incoming. Magic 8 Ball has confirmed it. All right, guys. That's it. There's nothing else I can say. Magic 8 Ball has spoken. Hopefully I'll get you guys some music back next time. Hope you enjoyed the stream. Catch you guys back in the Discord. Duck out. Peace.